Hi everyone, welcome back to Ask a CPA, where we answer your burning questions about taxes, finance, and everything in between. I'm Brett Phillips, your resident CPA, and today we're diving into a topic that's crucial for many small business owners. How do you pay yourself from an LLC? Now, if you're running an LLC and you're wondering about the best way to get paid, this video is for you, so let's go ahead and get started. First things first, let's briefly talk about what an LLC is. So an LLC stands for Limited Liability Company, and it's a popular business structure because it offers liability protection like a corporation, but with the tax flexibility of a partnership or sole proprietorship. So now, how do you pay yourself from an LLC? Well, it depends on how your LLC is classified for tax purposes. So let's start with the simplest form, the single member LLC, often called a disregarded entity for tax purposes. In this case, the IRS treats the LLC as a sole proprietorship. So, how do you pay yourself? Well, you pay yourself through owner's draws, which are simply withdrawals from the business account to your personal account. Now, these are not considered wages, so you don't have to withhold payroll taxes. However, keep in mind that you will need to pay self-employment taxes, which include Social Security and Medicare, on your net income of the business. So make sure you set aside money for these taxes throughout the year to avoid any surprises come tax time. Next, we have the Multimember LLC, which is treated as a partnership by the IRS. So how do you pay yourself in this scenario? Well, each member of the LLC takes distributions for their share of the profits. Now, this is similar to owner's draws, but for multi-member partnerships. So you might also receive guaranteed payments, which are similar to a salary and are made regardless of the profitability of the business. Now, just like a single member LLC, you need to pay yourself self-employment taxes on your share of the income, including guaranteed payments which are paid on your personal tax return. Now, what if your LLC elects to be treated as an S corporation? Now, this is a popular option for many LLCs because it can provide tax advantages by minimizing the amount of self-employment tax that you pay. Now, you must pay yourself a reasonable salary, which means you become an employee of your LLC. The salary is subject to payroll taxes, just like any other employee's wages would be. In addition to your salary, you can take distributions of the remaining profits of the business. Now, these distributions are not subject to self-employment tax, which can lead to huge tax savings. Now, remember, the key here is that the salary must be reasonable. Now, the IRS scrutinizes this closely, so don't try to underpay yourself to avoid taxes. To come up with a reasonable salary, look at similar jobs and see what they are paying. Depending on your business's net income, your salary should be at least 30% of your net income. For example, if your business grosses $300,000 and you have operating expenses of $200,000, your net income is $100,000. Now, depending on your industry, you'd want to pay yourself at least $30,000 in wages. The remaining $70,000 can be withdrawn as a distribution. Now, the benefit of the S corporation is that you only pay SE taxes on the $30,000 of wages. In this example, the S corporation would save the owner 15.3% on that $70,000 of distributions, so $10,710. Now, here are a few practical tips for paying yourself in an LLC. So first, have separate bank accounts. So always keep your personal and business finances separate. Use a dedicated business bank account for all your business's activities. Second, regular payments. So set a regular schedule of taking withdrawals or paying yourself to maintain consistency and discipline within the business. Third, and finally, consult with a CPA. So tax laws can be complex and vary by state. So consult with a local CPA to ensure you're compliant and making the best financial decisions for your particular situation. Now, that's it for today's episode of Ask a CPA. I hope this helps clarify how you can pay yourself out of your own LLC. If you found this video helpful, make sure to give it a big thumbs up and don't forget to hit that subscribe button down below for more financial tips and advice. If you have any questions, make sure to drop them in the comments down below and we'll cover them in a future video. Thanks for watching, guys, and we'll see you next time.